Prop firms do not have your best interest at heart, and people spend so much more money on assessments than what they need to. Assessment drawdown is a real thing. We've been running our fund successfully for over 5.5 years now, and we can see what people do to not just get funded but stay funded, so they're not just hemorrhaging money hand over fist, all of their money they've worked hard for, and just gambling it away. This is one of the main reasons with the launch of Hybrid Funded Trader, we're actually going to be giving back. We're going to be giving away up to 50 funded accounts on our in-house fund. So in this episode, I'm going to share with you where you can kind of fit in on that, whether you're someone who doesn't necessarily trade our strategy, maybe you have your own strategy. I'm going to give you for the very first time a bit of an exclusive as to the different divisions, where you could fit in, how you could keep your strategy and still trade on our fund, and how that could work for you. And I'll show you a bit of the scaling plan so you can see how you can actually get to trade in up to $2 million. But this is going to be one of our biggest giveaways. We've never ever in the history of this project done something like this, and we're doing it on the launch of the 28th of August. So if you're someone who just trades gold, as you can see here, I've got gold, silver, US oil, copper, and platinum. I'll get to that in a second. I want to show you the scaling plan first, and you'll see how you could do this on our fund. So let's say, for example, whether you win an account, or let's say you started off on level 1 on a 15K account, you've got 7% target. That's all you need to hit. 7% target. And then once you've got that, of course, you get your payout on actually hitting that target. It's not massive. It's just to kind of get you into the bigger accounts. Your account will quadruple. So you'll be going to level 2. You'll be a portfolio asset manager. You'll be trading with $60,000. Now, once you hit 10% on the 60K, there's your target, $3,600 as your payout. That's when it starts to become a little bit interesting. Where the real money is made, or where you can start looking at things like, oh, can I actually replace my income from my job? It's at level 3. 120K account in the prop firm world, not massive. Easily achievable. Many people have done it. Once you've hit your target, you're then going to be looking at 7,200 on your payout split. Of course, level 4, $250,000, as you can see, progressively gets bigger and bigger and bigger. The goal is to get towards high 6 figures, 7 figures. After we start getting into that plus $1 million, it becomes more bespoke, where higher profit splits and everything like that. But this is our standardized protocol. Now, when you actually get over 7 figures, or very, very close to it, we do unlock 70% profit split. So more competitive in that way. But please remember this, we are not set up like a typical prop firm where we're just doing assessment after assessment. We don't allow it. We have no interest in it. We want to make sure traders are doing well, they're scaling up, they're keeping their capital. More importantly, if for whatever reason you lost your account, so let's say if I go over to here, you were trading gold. If you lost your account and we looked at your trades, and for whatever reason you just traded through an environment where you just didn't do that well, but the trade quality is there, I'm not going to take you from like 1 million, or let's say 960, and go, hey, you got to start off at 15K again. No, I'm going to look at the trades and go, was this person reckless, or did they actually follow the protocol and it was just unfortunate sequence of losses and they lost the account? If that's the case, cool, we can reinstate your account. Maybe not at 1 million, but you won't be starting at 15K again. And then you ask yourself, in the prop firm world where they don't give a crap about you and you are just a random little name number in a spreadsheet, how much is that worth to you? So what I'm looking for on the fund is people that can trade different asset classes, and some people are better at trading different ones. So like gold, for example, I will share with you how I would see it if I was you. So if you're someone who just trades gold, fine, you can technically do that on the in-house fund. I would prefer more of a set. So not just trading gold. I would want you trading silver as well. I would want you trading US oil when appropriate, and then copper, and then also platinum. So you don't have to be simultaneously trading them like all day, every day. That's not what I'm saying. I'm saying as a whole, I want you hedged, because let's say you're trading gold. And if I just go back on the 15-minute and we go through a different cycle. So let me show you a cycle where I would see it as a bit more on the choppier side. Would probably be, yeah, probably here. So I'm going to highlight it for you. Probably here, and probably this right there after the sudden drop, right? So what you got to understand is price isn't always moving in smooth pullbacks, continuations, and just like progressively pulling back to go long, etc., etc. You get stuff like this. Now, if we measure the actual days and we take a look at, let's say here, because it's harder to trade, from there to about, I would say there, you're talking about 20 days. So imagine, yeah, give or take about 20 days of price action. So imagine in that scenario, you force lots of trades and that you're now taking horrendous trades. You're on the fund where we have an invested interest in you doing well. You was also doing well in, let's say, this environment, right? So from like roughly, yeah, we'll go here to, yeah, here to roughly about there, right? So in that phase, brilliant, right? These all meet the plan, even on the way up, like brilliant trades across the board. And this is just on the 1 hour. I'm not getting into all the nitty gritty, smaller time frames. That's a great environment. But if you don't have the foresight to recognize, especially after that into this, that, okay, maybe trading gold for the next like week or so is probably not going to be that viable. And there may be different commodities that are way cleaner. You are going to force trades on the lower time frame. I'm telling you, you're going to draw down here. So your account will be up here and then suddenly it'll be like a slow bleed for like a month and you'll go, Mark, what's happened? And I'm going to tell you, you didn't have the foresight to drop your ego, move to a different asset class for maybe a couple of weeks whilst gold settles itself, and then you can trade appropriately. So for example, after that, we eventually did move into a condition where it made sense in here. It made sense in here. It even made sense on the way down. And it definitely made sense here, 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 here. There were so many trades. And eventually, once we hit this, again, it's having the ability to go, right, if we've been selling for this long into this key level right there, probably going to have deeper pullbacks. So if we have those deeper pullbacks, are the conditions going to be favorable for me? Probably not. So am I going to force trades in here? No. But if you've got nothing but gold to trade here, guess what's going to happen? You're going to force trades here and go, Mark, my account's in drawdown again. And then you could end up losing the account. My goal is to get you staying funded, not just get funded. So that's just two simple cycle examples, and not that they're quite close together, right? For you to look at, it's not difficult to understand that the market will go through different cycles and you need different tools in your locker. So if you look at, let's say, gold and silver are going to be closely correlated, but I would actually use silver as my hedge, because sometimes a trade is shaping up on gold and silver and they look really similar, but then silver will give you an actually cleaner version of that trade. So then go for silver instead of gold. But if your ego is like, no, I only trade gold because you've created this identity around it, you're actually losing your edge by not being able to just take 4 seconds to look at silver and go, that's better positioned. So look at silver right now. Silver, looking for price to tap into these areas right here for the long. Right, gold, looking for price to come into these areas for the long. It's the same damn trade. But when it gets to the value area, it might give you a slightly cleaner entry on gold or silver. And then you just kind of look at them side by side. It's not complicated. So I would want you doing that, because I know you're less likely to go and draw down, more likely to keep your account, more likely to do better on the fund, and more likely to be less stressed. And then, for example, you might have some higher time frame moves. So you might be on the lower time frames on gold, fine, but you might be higher time frames on US oil. And then sometimes US oil is looking absolutely horrendous and I wouldn't want you touching it. And then I'm relying on training you to know what to actually look for, to know when not to touch it. Like right now, US oil is horrendous in comparison to gold. Gold is way cleaner. So would I want you trading oil right now? No, I'd say just leave it alone. There's way better setups. When we start getting into these different areas, you can pick your levels and wait and go, okay, well, if we fill that gap and we move into this at 93.5, probably a good area for us to take a look at. If we start to keep a strong close, and this is a phase 1, phase 2, and we're in phase 3, and we start to break out, then I would say, okay, any pullbacks here, feel free to take those long and start looking for some longs into 93 and start taking profit around 93. Simple. But when it was in this, you wouldn't be forcing those trades. You'd actually be looking at gold. So it's just being open-minded to trading a set and not feeling like this is going to be a hindrance to you. If anything, it's going to give you a greater edge, because you won't have those experiences where you just like force trades for 15 days. How many times have you forced trades for a couple of weeks when you look back in hindsight and go, that trading condition was awful, but this is all I had to trade, so I felt like I had to force trades when I shouldn't? If you were really honest with yourself, you do that a lot and it causes you to go in a lot of drawdown. Like right now, I'm actually looking for some higher time frame shorts on copper. So it makes no sense to get involved in lower time frames. As you can see, right, high broken, tapped it again, high broken, come back up, swept that high. Now we're in this kind of reversal territory. We have a clear range. We're looking for copper to sell off there. Nice and simple. So once we get our confirmations, you can get in those shorts for copper. And then as a hedge, you could be getting long on gold for like 3-to-1s, 5-to-1s. So you're hedging in that regard. Platinum is another like extra to be able to trade. Like, so for example, from a higher time frame point of view, platinum's brilliant. So if you want to take some shorts and you literally just play the ranges, so you got to know when to do what. So again, you play the ranges. They work really well in playing the ranges. Right now you can see that we are in accumulation. You've got your value area sat right there. You have your phase 1, your phase 2, your phase 3, and we're either going to hold here and then you take that to play the range, or we're going to be mimicking this run into these areas. So we're in that beautiful environment right now where platinum can start to come into play. For a period of time, platinum was awful, but you don't need to be trading platinum. So it's not when I say you got to trade all of these, you trade them simultaneously all at once. No, you actually just look for the week ahead, recognize the environment that we're in, and then you don't need to trade it. And you might actually only be trading gold for that week, but having your ego so involved, it's like, I trade gold, I only trade gold, and you're getting cooked on the lower time frames and you don't have a higher time frame approach to it, it's not going to end well. So you might see some people like, oh, I only trade gold and I make money, but yeah, but for how long? How long have they traded for? How many market cycles have they traded for? Because if you've been trading gold for a couple of years, you'll feel like you've traded it forever. But I can tell you this, gold has not been the same indefinitely. You have to know when to do what. This is why having a hybrid approach, if you're trading a hybrid model, you wouldn't be at the mercy of the market ruining all of your progress and undoing all of that hard work. So just food for thought. If you're someone who wants to get involved, this is less about the strategy and more about the infrastructure that we have in our fund is priceless. And when these prop firms, whether they are CFD or future, they will mess you around. And it normally takes for someone to really mess you around to realize, I actually need someone looking out for me. I need a fund that I can rely on, one that's going to actually act in my best interest, make sure that I've got emotional composure, people that jump on webinars with me so I can actually build a trading career. If that's of value to you, make sure you get involved. And there's a high chance that you'll probably win an account. But even if you don't win, having access to the structure and having access to the infrastructure that we have is way more crucial than what you think. Don't be someone who's reactive. Don't wait for the funding firms to be now so unfavorable where you're literally begging to get a payout because they're finding every reason under the sun not to pay you, where you're like, I need to be involved in this. Because at that time, I can't guarantee to you that you'll even be able to get access to it. I can't guarantee that you might be waiting 6 months to be able to get involved. And then you're sitting there stressing yourself out thinking, if I was proactive and made some good moves, so I at least have this. I'm not saying put all your eggs in one basket, but not having the in-house fund as one of the main baskets is so naive with these funding firms.